Okay, I think we'll get things going. Good morning or good afternoon, depending on where you are in the world. And thank you so much for joining our webinar today. We're doing these webinars at least once a month. We're trying to sort of keep them as informative as we can and different as we can. We do mortgage webinars, we've done location webinars, tax webinars. So do stay in touch with us and give us feedback on what you'd like to hear more of, and we're happy to obviously listen to that feedback. To introduce myself, as it says on the screen, my name is Johnny Conran, and I'm managing partner of Joseph Mews, and I'm going to run you through today, obviously, the presentation on the future of Derby, a city obviously based smack bang in the middle of England. And we're going to run through a little bit about Joseph Mews, a little bit about the UK market, and then we're going to focus on Derby as a location, as well as then the development that we're launching now. So it will be me on today's session. We are doing an evening session as well, which will be later on, and my colleague Andrew will be running that one. But you guys are stuck with me for this one. So if we go to the next slide, please. So just to give you a very quick and brief history of Joseph Mews, for those of you that don't know much about us, we were founded by the gentleman that you see on your screen, Andy Foote, back in 2001. And he started the business based on his own experience with investing in property that was quite poor. He didn't really have much customer service. He didn't have much help going through the process. And so he wanted to change that. He thought, right, I've been in property, working in real estate for many years, and I want to be able to offer clients both in the UK and around the world the opportunity to invest with your hand held through mortgages, lawyers, tax, rentals, furniture, everything. And so that was the start. It obviously was an attractive offering to many developers in the UK. So what it entailed is Andy growing a huge developer in the UK called Seven Capital to one of the biggest, the biggest in Birmingham and one of the biggest in the UK. And that has transformed in recent years to Joseph Mews. And the movement to Joseph Mews was based on the fact that we wanted to work with different developers. We wanted to work with not just one developer. We have clients all over the world that want to invest either once a year, once every 5 years, 10 times a year. There's a real variety. But we wanted to be able to offer our expertise in choosing the best locations and choosing the best developers that we partner with exclusively, that we know are going to provide the best product for our clients, partners that we can trust and that our clients can trust. And that is why we're talking about Derby today. Next slide. People often ask us why we're called Joseph Mews. So Andy, the gentleman before, he's been obviously very successful in the real estate world, but he will always tell everybody that his greatest success is the brain tumor charity. He started that. It is now the largest brain tumor charity in the world. And the reason that he started it is because tragically his son, Joseph, passed away from a brain tumor aged just 9. And Andy wanted to change that for other families. And so he started the brain tumor charity in Joseph's name. And then since his passing, Andy has named offices, house, a boat after Joseph. So our office in Birmingham, which is our head office in the UK, is a Mews house, which is a style of house in the UK. And because this is Andy's swan song, and it's a great way for us to pay legacy both to Andy and to Joseph, we named the business after him. So that's where our name comes from. Obviously, we do a lot to raise money for the charity. I've done a podcast with some interesting people, and we have other initiatives. So if you would like to donate any money to the charity, obviously we're always massive advocates of that. Next slide, please. So looking back at our history, what have we done? So we've delivered 4,270 units over the years. I mean, that is obviously a pretty substantial track record. That's 632 million pounds worth, 43 developments around the UK, which is really important. We're not new to this. We've done it a lot of times with clients all over the world. And so we're experienced in not only choosing the right properties, delivering them, which is the hardest part, but then also providing that service to help you get through it. And obviously, we learn through experience. And we learn from doing that over and over again. And so because we've done it so many times, we know the people to work with and the people not to work with. So this is a really important part, that you know who you're dealing with. The client repeat purchaser is really important. Again, we do not work as a business whereby we're an agent that sells you a property and says good luck. It's all about building wealth through property. So we advise you on how one property can turn into two properties through releasing equity. We advise you on what you should look at in terms of diversity, in terms of different locations within the UK. It's very much an ongoing relationship. We run yearly portfolio reviews with all of our clients. So it's an important point to mention. This isn't just an agency run business where it's about selling a property. It's about the consistent and long-term relationship that we have and guidance that we give on how to maximize your wealth from the investment. Next slide, please. So I talked about working with the best developers. We really just want to work with developers that we know we can trust. These names from a development point might not mean a lot to you. Knight Frank might. Knight Frank are one of our partners. We partner exclusively with them in the Midlands area, which is a great testament to our track record that obviously the biggest real estate agent in the world now are partnered with us. What it means is that we work with them exclusively on some of their developments that we want to sell in the Midlands area of the UK. The other developers, Elevate are the largest in Birmingham, Secon are the largest in Yorkshire, which is where Leeds is, HBD, a huge £1 billion portfolio. All of these developers have a great track record, have delivered various projects around the UK that we know we can trust. And so everyone that we put forward and every development that we advise our clients on is from a reputable, proven developer. Next slide, please. So again, look, one thing I've learned from my own experience investing myself is that I'm based between the UK and the Middle East. I'm a resident in Dubai, and buying property from overseas when I'm 3,000 miles away, it can be stressful. You know, you have different parts to go through. You have the lawyers, you have the mortgage, you have, as I said, renting the property, managing the property. There's a lot of boxes to tick. And what can be a very stressful process is made easier by knowing who to deal with. And don't get me wrong, anyone that tells you buying a property in the UK is easy is not telling the truth, because it is, there's a lot to provide. The UK is famous for that, but with good reason. And obviously the long-term benefits are great. What we do is make that process as straightforward as possible. You always deal with Joseph Mews. We coordinate you to the lawyers. We coordinate you to the mortgage brokers, to the rental agents. Everything is done through us, through your relationship with us. And we don't use that as a revenue stream. We do the opposite. We leverage economies of scale. The fact that we give so much business to the lawyers, to the rental agents, to whoever else, we get cheaper rates for our clients. The reason for you doing this is to get a return on your investment, to maximize that as much as possible. And so cutting down the cost is a further way to do that. So this is really important. Next slide, please. Yeah, please do feel free. I know at the bottom you have a chat box. If you do have any questions, then please just ask, and we will answer them at the end of the session. So feel free to pop them in there. Right. Just quickly before we go on to Derby, let's look at the UK generically. The UK, you know, particularly over the last few years, there's been a lot of noise around the UK for potentially not the right reasons. A lot of them are, you know, applicable to the rest of the world, and some of them are more UK focused. We've had obviously Brexit referendum. We've had Brexit being delivered. We've had COVID. We've had inflation increases, interest rate increases. But you look at this graph that goes up to 2024. And if we look at that standard trajectory, it's obviously positive, right? We've been told that the property market was going to crash since Brexit. So if we wind back the years and we look at where we are now, it's increased consistently every year amidst what was supposed to be a property crash. And why is that? Well, the reason it is because the UK is famously undersupplied. We do not have enough property in the UK. It is compounding. It's getting worse and worse each year. There are more people, the population is expanding. There are more people moving to the UK, and the houses just aren't being built at a quick enough rate. We're nowhere near it. We're about 200,000 short a year on what we need to deliver. So this is compounding. It's going to go on for the next 50 years, they say. So what this allows is for this consistency in the way that the market performs. So the biggest representation of that I always like to point out, if we look at the biggest crash that we've had, right, in, let's say, a generation, which is 2008, that then got, you know, affected in 2009. If you had bought, which maybe some of you on this webinar had, in the top of 2008, all of your friends, your family, your partners would have said to you, oh no, what have you done? You've had a shocker. We're in trouble here. And look, If you had to sell and if you had to distress sell, then yeah, because look, it went down in 2010 to where it is. But if you didn't have to sell, and particularly if this was an investment, and so your mortgage was being paid off by the person renting it, and you could hold on to it, look at where we are today. It's nearly worth double what you paid for it. And that is having bought in what was supposedly the worst market that you could have bought in. And so that's why the UK is the most invested market in the world, more than the US, more than Canada, more than anywhere in the world, is because of what you can rely on. No matter the negativity in the media, the sort of changes in politics, what it continues to do is grow based on the fundamentals. Not enough property, a small island, millions and millions of people, great education, great transport links around the country. It's a small country, as I said. And so that is what keeps the market going in that upward trajectory, and which is why it should be it's recommended to be part of any balanced portfolio. UK property is resilient. I saw it described once, which I always use as the proverbial cockroach. Whatever you do to try and kill the UK market, you cannot. And this is a really good sign of that. Particularly when what you're trying to achieve here is either going to be passive income for your future, it's going to be retirement planning, generational wealth for your children, and legacy planning. And what you need to be able to achieve that is consistency. And that's why when we compare it to other markets around the world, there are obviously other markets that have performed well. I mean, where I am in Dubai, I mean, it's incredible what's happened in the last 3 years. But what we want to look at, if this is about those passive income, retirement planning, generational wealth, what you want is consistency, and you want history to rely that on. The UK market is the biggest market in the world that you can look at history to see how it's performed. And when you look at those fundamentals and you see what it's done time and time again through so much adversity, economic downturns, wars, inflation, it still performs well. And obviously, you need to find those key locations with the key developers to make sure that's even more resilient. But this is a generic performance. And when you can borrow money, take a mortgage, use somebody else to pay off that debt, pay off the mortgage from renting your property, that's why this stacks up as a important part of any portfolio. Next slide, please. So again, UK government has updated the housing targets. I mean, we are so far short of where we need to be, as I mentioned, and that is what is growing the market. All the forecasts now, where we are from Savills, JLL, Knight Frank, the big PLCs, everything is very positive for the next 5 years. We're in a position now where, as I said, the imbalance is getting higher, but also interest rates are starting to come down. They have come down, obviously, over the last few months, bank with the base rate going down. And obviously, there's been a lot of people sat on their hands and pent up demand, which is now coming to the market and will continue to as those rates drop. And so that is where we're going to see, again, positivity in the market, even more than we've seen in the last 5 years. Next slide, please. And again, look, we call the renter the cornerstone of property investment. If you are looking at buying a property as an investment, and if I think about my own personal circumstance, all I really care about is that, as I said earlier, my renter is paying off my mortgage. That's what I want. And that I'm not putting my hand in my pocket each month. I don't want to be having to top that up. So for that reason, you need to have consistent rental. If your property remains empty for 3 months, you're paying your mortgage those 3 months, cash flow is negative. So that's another reason that the UK is such an attractive market, because there isn't enough property. And so the BBC was telling us recently, the average home now has 25 tenants wanting to view it. There is not enough property. Properties are renting straight away. My biggest void period through all of my property investments in the UK has been 3 days. I speak of Andy's experience, who owns over 40 properties around the UK. In the 30 years that he's had those properties, his biggest void period has been 2 weeks, and that was because he had to do maintenance on the property. So that is something that you can rely on. You do not have void periods because there is not enough property. And don't get me wrong, when you choose the better city centre or the big demand areas within the country, then obviously that's going to be performing even better. So this is a really good point. What you want is to make sure that your mortgage is being paid off, that your tenant is paying off your debt, that you're not in negative cash flow. And that's why the UK works so well for this. Next slide, please. So we'll now come on to Derby. As I said, look, we as a business, we offer properties all around the UK. We offer properties that are complete. We offer properties that are off plan. all with developers that we know we can trust. We work with them exclusively. And they all have different reasons for that. And the reasons remain pretty similar between the different locations, the sort of main criteria that we look for. But obviously in different parts, you have different price points. So your Manchesters and Birminghams now, the second cities of the UK, pushing up and the prices have gone up. London is obviously the number one city and the prices there are very high. And then you have your third tier cities. You have your Leeds, you have your Derbys, Nottingham, Sheffield. And this is where a lot of investors are looking now, because naturally the lower price means yields are potentially higher. So with Birmingham and Manchester, those yields gradually coming down a bit with the capital values going up. London, forget it. That's a reason that we don't offer investment property in London, not because we can't, but because we don't want to, because everything that I just spoke to you about paying off your mortgage from your renter doesn't work when your rental yield is net 2%. And when you're looking in London and the prices are so high, the rentals don't compensate for that. So it's a negative cash flow situation. So that's why you want to look in areas where the yield is higher. And that's why these third tier cities like Derby are performing so well and why investors are looking to them to diversify. So if we go to the next slide, please. Right. This is where, for those of you that don't know where Derby is, this is where Derby is located. It is actually the most central city in the whole of England. So that's a interesting fact. For any quizzes that you're involved in, it's one that comes up, so you now know. But also commercially, it makes a lot of sense. You're close to Birmingham, you're close to Manchester, you're close to London. You can get everywhere, so it makes sense for businesses to want to be located there because, as I say, you can get to each part of the country pretty easily, and it's very well connected. So this is where it's located. Next slide, please. So investment potential, we're going to look at 5 different criteria. The first one is investment potential. What do we mean here? So let's look at the population for a start. The population is projected to reach 312,000 by 2037. The city has a young and growing workforce. 48% of the residents are under 35. What does that mean? Well, it means that you have young professionals living in the city. And what do young professionals in the UK do? They rent. So when we talk about wanting a consistent rental, that's what you get from markets that have a young population, because those are the generation rent, as they call them in the UK. People, A, can't afford to buy. They are more transient, so they don't want to commit to that. They're not going to be there forever. And so the market's changed. You know, even when I was growing up, it was very much get on the property ladder, buy a house. Now, generation rent, we're becoming more like Europe. The younger generations are just renting. Savills are projecting that Derby property prices are going to grow by 24.6% by 2029, and it's named the fastest growing in the UK. It's the sixth, it's the fastest growing economy in the UK. That's a very big point. What does that mean? It means there's a lot of investment into the city. It means that there's a lot of jobs, and it means that there's obviously a big need for property, and that is encouraging this housing undersupply. There's 17 universities within an hour of Derby. There's obviously the University of Derby, which is a great university, but 17 within an hour. We never build anything that goes to what we would call student accommodation. We don't want that because this is about longevity. This is about the future. And we all know how students tend to treat property. And we don't want to see that happen to our investments. So we try and make sure that all of our developments aim towards the sophisticated tenant. What do I mean by that? I mean, it's somebody that's working in a big corporate company that in general, you know that you can trust more than a student. And so that gives you that longevity and that exit strategy for the future. What the student element does bring is consistent turnover. It means that every single year when students are graduating in that city, that they have the opportunity to obviously stay and work in the UK's fastest growing economy. And that is a conveyor belt of new potential renters. So it's important in that sense. Next slide, please. So we're looking at the average property price is £212,000. Obviously, we're seeing that projected growth by 2029, and your average rent is about £813. And we're going to see how that compares to our development that we're offering now. But it's really positive for the future. This is, it's only 5 years away, 4 years away, and we're seeing really substantial growth. So this is, it's an important point to consider. Next slide, please. Employment. Now, this is one of the biggest parts that I consider when looking at property investment is who's going to be living in my property, right? It's not just, as I said, it's not just about there being people there that want to rent them. It's about who's it going to be. And in Derby, and the biggest pulls and why people are looking to it, and it's such an investment hotspot now, is because of the companies that have moved there. Rolls-Royce Aviation's headquarters, Derby. Bombardier, who make the trains, headquartered in Derby. Toyota, headquartered in Derby. Just in the manufacturing and engineering sector, there are 45,000 people working in the region. And then on top of that, you have education, IT, textiles, retail. There's a lot more. But these are huge offices, thousands of jobs of sophisticated tenants that need property in the city centre. And so having those big names committed to the city, embedded in the city centre is really important. The other thing that's important, as I said, that you've got this graduate retention within Derby. It has the seventh highest grad wage in the UK. So a lot of these companies are offering graduate schemes. And again, that is the target audience to rent property. So this is really important. These big companies are based there. They have been for a number of years now, and that's embedded and gives that extra demand. Next slide, please. It's, as I said, Derby is having been in the industry now for over 10 years. You know, you see these places come up. I saw it with Birmingham. Manchester was a little bit before, but with Birmingham, it changed from why would I invest into Birmingham to I wish I'd invested in Birmingham 5 years ago because the way that the prices have come. And Derby is that next place. It's named as one of the best places to buy in the UK consistently, because of what the couple of slides that we've been through now. But it's having its moment, and now is a great moment to invest because the prices haven't yet started reflecting that severe growth that's going to happen over the next 5 to 10 years. And if we go to the next slide, we'll see why that is. Regeneration is always a point that you need to consider. What does the future look like for the city? Is there inward investment? Is there institutional investment? And in Derby, there's £3.5 billion worth of reinvestment. Redevelopment initiative in retail, commercial spaces, transport links. Obviously, all of this drives higher demand. There's so much going on, both aesthetically, infrastructure-wise, transport links. And this is incredibly important for when you're looking to invest because it's about the longevity. What's happening in 5 years, 10 years? And when you've got billions of pounds being invested, you know that that's going to have a positive influence on the land prices and then obviously reflecting in the property prices. So there's a lot of this going on. You can look into it further. We'll obviously share this information after the webinar, so you can do your own research. But there's a lot going on in Derby, which is why it's having its day as an investment hotspot. Again, please do keep asking questions. I know I've got a few already, but keep asking if you have any more. Derby, from a historical point of view, there's a few UNESCO listed developments within the city centre. There's a lot of history there. It dates back to 600 AD. The culture and lifestyle element of Derby is fascinating. And you've got that beautiful blend of historic, aesthetic and grade listed buildings, as well as obviously the new sort of modern era coming in with the institutional investment that we're seeing. So it's a nice blend, it's a nice mix, and it makes for an attractive aesthetic. And I think if we go to the next slide, we talk about connectivity. So as I mentioned, connectivity. Derby is the most central city in England, or in the UK, I should say. And obviously, it's a crucial link, as it says here, between the north and south. So when we look about the future, look at to the future as well, and why commercial entities are committing consistently to Derby and more offices are opening and business parks are opening, it's because of that. There's more reliance on the north now than there used to be. You know, the UK was very much London focused, south focused in terms of employment and commercial entities wanting to be there. That's changed over the years. Manchester's obviously had seen big growth, Liverpool, Leeds, and Derby is perfectly connected between the two. So that's why it's attractive and why the future, again, is really bright based on that. It does have its own airport, East Midlands Airport, which provides international travel options as well. Next slide. So to put that into figures, and this is, again, an important point, Leicester, big city, 23 minutes. Nottingham, 29 minutes. Sheffield, 23 minutes. Birmingham, only 37 minutes. And London, an hour and 26. Manchester, an hour and 41. So it's, those top four as an example, four big cities in just about half an hour. Then London, only an hour and 26. It's incredibly well connected. And that again, is something that people look at in terms of their choices to where they want to live, to be connected to the rest of the country, but also for commercial entities to choose their locations for their offices. Next slide, please. Again, we talked about this, the culture and lifestyle. It's a culturally rich city, as I said, dating back to 600 AD. Theatres, museums. It's full of history, Derby, which makes it, as I say, a really interesting place. It makes it aesthetically beautiful, and again, it's an attractive place for people to want to go and move to and live in, which obviously bodes really well for any property investment that you have there. Next slide, please. So coming on to the actual investment, we're about to launch this, or today is really the new launch of it. Today's webinar, both this one and the one later. And if we go to the next slide, please, it's called Loom House. And if we continue, I just want to show where it is on the map. If we go to the next slide and then maybe back to this one. Obviously, location, we know it's really important when you're choosing an investment. And if you can see on that map where it says Loom House just above the station, I mean, that's a good benchmark. It is right next to the train station, incredibly important for the value increases of property to be close to transport links. The Derby Shopping Centre, which is again another benchmark that people look for. It's right next to that, it's just across the road. So you can get there just on foot. So amenities, bars, restaurants, as well as employment and transport links are just walks away. So Toyota and Bombardier to the south, Rolls-Royce just below to the south. So everything, this is right in the city centre of Derby. So you can walk everywhere. You can get to anything that you need to, whether it's jobs, transport, or amenities. And so this is a really important part. Go back to the last slide. So the development itself, we looked at the average prices, 212,000 within Derby. Starting prices here are £148,000, 20% deposit, rental yield 6 to 7%. I'll come on to that actually because one of the blocks of this development has already been completed. And for that reason, we actually have data of what is happening. So these aren't just projections, these are actual data of the other blocks, which are exactly the same, which I'll show you photos of shortly. But those are over 7% in some cases. So you're seeing 7.3, 7.4%. That is very high for the UK, as I say. So 6 to 7 across the studios, 1 beds, 2 beds is pretty conservative. But they start from £148,000. Completion is actually going to be sooner than this. You kind of have a bit of flexibility with that, which we can explain if you want to talk on it. But we work on a 20% deposit. And then obviously on completion, you pay, if you're taking a mortgage, you pay whatever you're not mortgaging. So mortgages, you can these days get up to 80% mortgages, depending on where you are in the world. I would always base it on maybe 70%, 70 minus 75 as an example. But let's say you're putting a 20% deposit down. On completion, you'll pay the other 5%, 10%, or whatever it is that you need. But the initial part is just 20%. And as I say, and then you're looking at a rental yield, rental return of 6 to 7%, if not above. If we skip forward a couple now. So this is one of the blocks. The whole point of this development is there's 3 different blocks and it's like a community. So within the internal areas of the development, there's landscape gardens, communal garden areas for the tenants, which are beautiful. And so you do have that sense of community within where you're living. And it's also obviously city centre, which means that everything from gyms to whatever you need, a walking distance. As an investor, that's important. Why? Well, because obviously service charge goes up for the more amenities you have, but this keeps the service charge really low, which means your return is even higher. But it's a beautiful development. And if we go to the next slide, these are real photos of the units. So this is the developer, as I say, Elevate are fantastic. They're the biggest developer in Birmingham, and then they've built obviously other parts of the Midlands, both in Nottingham and Derby. And they're famous for their quality. The finish really is incredible at this price point. It's one of the best I've seen. And so they're beautiful. You know what you're getting. You know you can rely on it. And as I say, these are real photos of what you would be buying into. The finish with the bathrooms, everything, attention to detail is fantastic. We have pages and videos and everything of previous developments that they have done. So we can obviously send those over to you as well. But they're a really trusted developer. As I say, they've built over 1,000 homes already. Um, they're a big player, as I say, the biggest in Birmingham, which is the UK's second city now. Their office is next to ours in St Paul's Square in the city centre. And so they have various other developments in Birmingham as well, which of course we can talk to you about. But Derby, this is their new block and their new launch, and it's a beautiful one. So yeah, I think that brings me to the end of the presentation. We do have, thanks to the developer, a special offering, which for only people that attend the webinar both today and later on, they get £1,000 towards their legal fees. So just we'll have you on the list of who attended, and yeah, and you'll get £1,000 discount towards your legal fees. So hopefully that's a good incentive for you guys as well. I think we're gonna, before I answer a couple of questions, I think it would be good. We can ask if you want to book in a follow-up meeting with one of the team, either with ourselves or for your mortgage options, which I know is obviously really important. We encourage everybody to book in a mortgage consult. If that's what you're planning on doing. Obviously, some clients buy cash, the majority buy with a mortgage. But it's really important, I think, when you're going to commit to something like this, that you know what your options are. Hence why we offer these free mortgage consultants with qualified mortgage brokers, and they will tell you exactly what your options look like, what the loan amount you can take is, and what the management fee, the loan amount will be, and the interest rate will be. And so once we have that data, we can plug them into cash flows, and we can really look at this from a financial perspective and say, right, this is what your cash flow is going to look like. This is how much money you're going to need to put in, and it just makes it a little bit more digestible for you. So if you'd like to book in all of them, you can book in all of them. If you'd like to just book in one, you can do that, and you just need to press on here. In terms of questions, we've had a couple about rentals, about how that's managed. We coordinate all of that. So everywhere that we build, whether it's Derby, Birmingham, Leeds, whatever it might be, we offer that service. So we work with the best rental agents within any given area, and we offer that as a service to our clients, that we say, right, do you want us to rent out your property? Yes, I do. Well, we can put you in touch with one of the agents in that area, and yeah, that's all coordinated through us. So what we do in the example of a property that isn't yet complete is that we will say just 3 months before completion, there'll be a showroom built, which actually already exists in this development, and the local agents will start showing the development and the showroom to interested parties, so that by the time that your property is complete and by the time you've completed, you have somebody renting it straight away. It's all about getting that tenant in immediately, so that you're not having to pay your mortgage on the first month, that the tenant is paying that for you. So we coordinate all of that. Again, because we leverage economies of scale, we give these guys a lot of business. We get cheaper rates. So full management fee will be anything from 8% to 10%. So that's the point. Questions on interest rates. Look, it's hard to say. It depends on your situation, where in the country, where in the world you're located. They can range. Obviously, the base rate is coming down slightly now. You're looking at anything from around 5.5%. We've had some at 4.8%, some at 4.7%. Again, look, we plug all of these into cash flows, which will again show us exactly what it's going to look like from a cash flow perspective for you. Had a few questions about the presentation slides and the pictures of everything and the track record. We're going to send that to anybody that requests it. So we'll send you a follow-up email after this, and then we can send all of that. Another question: are units being sold fully furnished, or the tenants simply walk in? So all of the properties that we build anywhere are all what we call ready to rent. So they're completed, ready to rent, with built-in wardrobes, with the white goods, dishwasher, washing machine, fridge, freezer, everything like that is included. The only thing that isn't provided is furniture. We can provide that. So there's different furniture packages. There's the more extensive ones. There's the sort of entry-level ones. We can send you the brochure on that. My advice is city centre. Most people look at furnished, but you do get people that perhaps have their own bed, or they want to do things themselves. This is what the agents tell us. So it can be the case that you might want to leave it unfurnished until you see what your option is, because maybe somebody will walk in and say, "Oh, right, yeah, I love it, but I need full furniture," and then you can provide that furniture afterwards. So again, we do provide that service. We fit it all for you. We put it all in. But yeah, it would depend on which one you choose. But as they come with the price that you're paying for it, they're fully ready to rent, which means they have all the white goods, built-in wardrobes, carpet in the bedroom, wood flooring in the living spaces, fully functional bathrooms, everything like that. It's just the furniture that isn't included. So hopefully that answers that. A few questions on tax as well. I can't answer. I'm not a tax advisor, but we do work with tax advisors. What I would say is that there's different options. So if you're based in the UK, it might make sense for you to buy this through a limited company because you're paying corporation tax rather than paying income tax. Corporation tax is 19%. If you're paying the highest bracket of income tax in the UK, as an example, then you're adding to that. Whereas if you're based overseas, there's 130 different countries that have double taxation agreements with the UK. What that means is that you get £12,500 free income. So if you're buying a property at this level, where let's say it's £1,000 a month that you're getting for rent, you're not going to be paying any tax. So that would make more sense for you to buy in your own name. If you were buying with your partner as well, who is also from a passport holder from a double taxation agreement country, then you get double the allowance. So that's 24,000. So for the first couple of properties that you would buy from overseas, if you do have one of those passports, then it would make sense to buy in your own name. If you are based in the UK, then it probably makes sense to buy in a limited company. Again, we have the facility to help you with that and to set it all up. Question on the exact location and postcode of the development. We'll send all of that over as well. So you've got all of that information. You can check what's it called? Google Earth. And also we actually have photos and everything of the development as it is now. It's ahead of schedule, which is amazing. It's testament to the developer. But you do have flexibility with the payment terms. If you wanted it to complete on it really soon, you could do. And if you wanted to sort of stagger it slightly later, then you can do as well. So that's a good benefit of this development. Anything else I haven't answered? Do you have other property locations? Yes, we do. As I mentioned, we've got different locations: Birmingham, Leeds, commuter areas of London, never central London for the reasons I mentioned before. But we have different price points, different sort of stages of build, some that are complete, some that are further away. So we can obviously provide detail on those. And as I say, it's great to book in one-on-one meetings with us to discuss. We have an office in the Middle East, in Dubai. Our head office is in the UK. We also have an office in South Africa. We have Cape Town and Durban, and somebody in Johannesburg as well. So if you would like to book in a one-on-one call, either face-to-face or over Zoom or over the phone, then obviously you've got that option on the screen here. I don't think there's any more that I haven't answered. But as I say, if you do have more questions, then please do get in touch, and we can obviously answer them. We will send everything over to you on email, so you've got all the information that you need. And yeah, thank you all again for joining today. And if you want a reload of it, you do have the option of the later webinar as well with my colleague Andrew. But I hope that's been useful, and I look forward to hearing from as many as you as possible. Thanks very much and enjoy the rest of your day.